So as we convene with our energy and thoughts refreshed, let's initiate our workshop on domestic and international bullion exchange, moderated by Mr. Surendra Mehta of IBJA and Mr. Harish Chopra, and headed by Mr. Ashok Gautam. Mr. Ashok Gautam, sir, I would please like to... Mr. Ashok Gautam is the CEO of India International Bullion Exchange, one of the most challenging jobs that any executive in the country would be currently heading. A new regulator, a new exchange, a new territory, but then there's always a reason a person dares. An FRM charter holder, he was the former executive director at IDBI Bank, head of treasury at Axis, and has spent 25 years with SBI in India and global offices. Mr. Gautam is more than a banker or a treasury management expert. He is the face of emerging leadership in the exchange business. We welcome you, sir. I now invite Mr. Surendra Mehta on the dais, please. Mr. Mehta, a chartered accountant. I would actually call him a celebrity in the gold industry for his expertise, his networking, his connects, and his knowledge. He is the secretary of the India Bullion and Jewelers Association that has been instrumental in driving changes in IBJA and its pan-India expansion and giving it its rightful place. Mr. Harish Chopra, a chartered accountant with 29 years of industry experience, with a vast experience in bullion banking and having spent nearly 16 years with Scotiabank. He is now a senior policy consultant with IGPC, has been a contributor to various reports on the IIBX and domestic spot exchange, working closely with the regulators. I now invite you to share your views on the domestic spot exchange.
International, actually.
Okay, on the international.
We'll start with international.
Thank you, sir. Thank you for the correction.
Thanks, sir. Thank you all. Hope you had a good lunch. So we are having this session, which I think is the longest for the day. I don't know whether I should thank Sudesh for this or blame him because he's starting it right after lunch. So on a brief introduction which Anu has provided of Mr. Gautam, I just want to add a line by Ghalib. Goes like this. मुश्किलें मुझ पर पड़ी ऐसी के आसान हो गई. With so many difficulties falling upon me that everything became so easy. So I think with this energy, we'll take this session forward.
Thank you. In 2015, IBJ had a gold conference wherein Mr. Shaktikanta Das was invited as the chief guest. And he initiated the idea of bullion exchange in the country. From 2015, that time he was a secretary DEA. From 2015, it is 2022. We have been working hard to ensure that bullion exchange, all the hurdles of the bullion exchange gets cleared. And then finally, Mr. Arun Jaitley, when he was a finance minister, he announced the bullion exchange. And thereafter, SEBI was brought in, IFSCA was formed, and so many developments started happening. We are very fortunate that finally an international bullion exchange has been formed in the country, and Mr. Ashok Gautam is going to head the bullion exchange. And with his vast experience and knowledge about banking and knowledge about the subject, because the way he gets into the nitty-gritty is wonderful, remarkable. And he has become a loved boy for the industry also, because when my president, Mr. Prithviraj Kothari, said, we got a right man, so I must congratulate and you, Ashok ji, because बहुत ही difficult subject था. It was international bullion exchange is really a difficult subject. And let me start with the first. I think before we go ahead, let us first understand what this international bullion exchange is all about and how it will be operationalized and why there is an international bullion exchange. I'm putting all the first three questions to you. So first, a brief introduction as to what was the need of international bullion exchange, how it will become operational in the country, and what are the advantage of this bullion exchange.
Right. Thank you very much, and very good afternoon to all of you. Such an honor to be invited to a conference where there are so many illustrious organizations' names are written. I am Ahmedabad, the best and the most premier management institute, India Gold Policy Center, and the who's who have sponsored it. Thank you very much, and certainly I am overwhelmed with the love and affection which has been shown, and also the two stalwarts who are I wanted to know to say on my left flank or right flank, but probably they both between themselves know about bullion, which I only aspire to know in my lifetime. So I am learning from them. I want to work with them so that, and I want to work with all of you. That's where, and that's how this whole exchange, I believe, would work, where this is actually working for the industry. If I just tell you a little bit what happened, though I wasn't there at that point of time when all those, but I've been told by many people that various ministries came together. There was this requirement from various departments. There were different papers which were published by academicians, and this thought always was there that India, being the second largest gold importer and gold consumer, can we have a say in the international space as far as the market is concerned, or we will always be a price taker. Apart from that, can this exchange be formed where it becomes the preferred route for importing gold into the country? At this point, it is one of the routes which is getting enabled very soon for qualified jewelers. That is the entity, the way it has been named. We'll talk about that a little bit once we go on, that they will be able to import. But I think that will be looking at this whole India International Bullion Exchange in a little narrow perspective. Because one piece which I always am so proud to say is that it comprises of two very important names, words before the bullion comes. That's India, and the second is international. So India is where it is, and that's we discussed about this brand and everything. So India per se, the brand, that's what we want to highlight probably at some point of time. And one of the hashtags which I have started now putting in my LinkedIn posts is the India Gold, because that is something at some point of time probably, globally, India Gold will be the one which people will aspire to have. So that is India, and international is our aspiration. Our aspiration is not that we import from international players and give it in India. At some point of time, we become, if not the dominant, but at least the equal partner in the international trade. And we have a plan in place for next 3 to 5 years. Our board has been very kind enough to, work with us on that. And our regulator has taken a look at it, and we'll reach there slowly. But the idea is that we have to have international aspirations. This exchange has to find its space in the international arena, so that so I think the time has come for India itself to regain its past glory, which now the economists are saying as so many factors are working in favor of us. And probably IIBX will be a small attempt in contributing to that regaining of India's glory in so many other things apart from the financial and the bullion and the market space. And that is where we would aspire to be. Here there will be number of things which we'll talk about as we go. So these are the two principal objectives which I thought I must share with you why this India International Bullion Exchange is there. Starting with the gold, but definitely silver is not too far behind. Maybe it might come simultaneously or little later. But these will be only the beginning. Then we will be also looking at other precious metal products, and many things are in place. We'll talk about it as we go on. But I think what Mehta ji also asked, and he wanted me to say about the operational preparedness, and I think that is what everybody is eager to know, and I want through you to be told to many people, your colleagues, your friends, your circle, that you know what all this IIBX preparedness is all about. And so just to tell you, let's first talk about what I always call the bedrock. The bedrock, what I always say for us is that can we be the preferred gateway of gold import into India, and how do we do that? There are already established channels, nominated banks authorized by Reserve Bank of India, nominated agencies authorized by DGFT, and now comes the third piece, which is the qualified jewelers, again authorized by notified by DGFT. What they have said, yes, IFSCA will give some conditions for them to be qualified as a qualified jeweler, and I am happy to share that as of now 30 entities have been given the qualified jewelers certification. This information is available on our website as well as on IFSCA's website. There are other 17 applications which are in various stages of scrutiny and approval. What we believe firmly that once we take that next step, which is the most crucial step, which I am going to now share with you, I think this number will grow. And as we start actually putting in the real transactions, people will slowly get used to it, and we will reach our point where this would become the preferred route for import in the country. So here let me tell you one of the key points on the operational preparedness which we are awaiting a go-ahead. Post DGFT notification and IFSCA stipulation of various guidelines, and we being, if I can use that word, frontline regulator for this space, doing that scrutiny, inviting the applications and notifying the jewelers. What we all are waiting is that Reserve Bank of India has to come very soon with a standard operating procedure for remittance of the US dollar to GIFT IFSC for the purpose of gold import. As you know, there both the angles are there. There is a FEMA piece which is very much there, and obviously then also gold is in that sense, though for so many years what we have seen, there has been no control over the gold import, but still there have always been questions. This adds to the whether if through IIBX a third route is open, whether it will open the floodgates of imports of gold into India, and what all will happen. Our US dollar is going. This is the first time we are permitting the outflow of US dollar even before the gold actually comes in, because if you see on the consignment route, the gold actually comes in. It's a duty paid gold which is already there, which is now then is being priced by the jewelers or the bullion dealers or whoever is buying that gold. So these are the very obvious questions, very real questions, and we are working with the regulators. We are working with the Reserve Bank of India to give them a comfort that IFSCA, which has been created by Government of India, is regulating this exchange. Even the vaults where the gold is there, that is also being regulated. There are specifications through which there are various operating guidelines which are there, through which those vaults are being maintained and monitored. Then there is a depository piece which is there, which will convert the gold which is in the vaults of IFSCA into bullion depository receipts, which will then be traded on exchange. Now there were also various other questions. Is the trading in gold permitted? You give it any name. We are calling it import of gold. And whether the dollar which is going, is it an advance dollar? Is it an advance payment? And all those questions. Why I am saying all these questions? Because you all should know that these are the questions. And even though simple notification enables a particular process, but ultimately to give it a shape, it takes lot of efforts, and a lot of rules and regulations are to be looked at, that we are not taking any step which is contrary to any other statute, rule or notification which is elsewhere in place. So it's a very elaborate exercise through which we are going right now, but we are very confident that very soon, I don't want to put a date to it, but it could be as soon as this week or maybe the next week, by when we expect that Reserve Bank of India I am still using the word might, come up with the SOP for the dollar flow into IFSC area. So once that dollar flow happens, after that, now the question will be how that import actually takes place. I can continue with this whole process? Yeah. Yes. Okay. How this dollar import actually takes place. So it's very simple. If you have seen our website, and if you have not seen, kindly always type before our website name HTTPS, because it's a secured website, :/IIBX.co.in, and there all the details are there. But let's talk about the first contract which we are going to launch is going to be the T+0 contract. Now, though we have been told by so many people that we are getting into where people actually do not get into, that is the T0, because elsewhere globally T0 is not so obvious or popular. It's T+1 or T+2 or so. The contract, the way it is envisaged as of now, is that BDR which is traded, or the qualified jeweler who has bought that BDR on the exchange because of the bid which he has put, and it matches with the offer of which the seller has put, and this BDR gets credited to their account at the end of the day. So we at IIBX started thinking that what value we can give to the qualified jeweler. Can we provide them the physical gold same day? Now, whether it is required, not required, to be done, not needed, needed, not needed, to be done, not to be done is immaterial. What we are saying, we started looking at it. We also understand, being a banker throughout my life, I understand that there is a working capital which is stuck. Because so if you get the money a day before, send the dollar which reaches the next day, and then there is a trading happening, and a day later you actually take the gold bar out, and then it reaches your destination. Obviously a day longer or 2 days longer than what you usually are comfortable with in today's scenario is something which may not be acceptable to you. So then we started thinking, can we look at a process, and there our tech partners, which is BSc Tech, and then in fact I should have started with that. We are being promoted by CDSL and NSDL and NSE, MCX, and BSc through India INX and India Clearing Corporation at IFSC. So they all have come together to promote us. So, and we are so blessed to have these 5 wise men and women who actually guide us on the board. So, and they have also provided us support by way of contributing members who are very senior professionals in the exchange space, in the commodity space, who are part of our executive committee. And so they guide us, they tell us what is the right way forward, and then we debate and we brainstorm. So then we came to a decision that why not in 30 minutes we can give you the gold bar as soon as you trade on the exchange. And somebody in the last conference when we spoke about it, they were saying you are doing the Swiggy or the Zomatoization of the exchange. But that was in a lighter vein. But when I am saying, I am dead honest that once you do a trade and the trade matches, we are working on a system. Our tech partners are supporting. BSE Tech is our tech partner, and all our promoters are supporting in this endeavor. That the moment the trade matches, it will not wait for the evening settlement cycle, because you would have in any case paid for the money in the form of dollar before the trade gets initiated. Similarly, the one who is trying to sell would have brought the bullion bar and got it converted into BDR before the trade gets initiated. With these two matching, we will be in a position to remove this trade and push it directly for the settlement. We are working with on an API with our depository, which right now is being managed by CDSL. It will become the part of India International Bullion Holding Company umbrella very soon. And through that, within 30 minutes, it's available to be credited to. In fact, it will be credited to your account, because you will be, everyone who comes to exchange will have a depository account. So in the depository account, you will have your BDR ready. Not only that, we are also working on an API with customs, so that the moment you have the BDR in your account and you express desire that you want to take the physical gold out, through that API, that information will flow to the customs, and then you have your ways to pay customs duty. So you can pay through the export scripts which you might be having. You might pay through the advance customs duty which you might have in your balance, and third, you might pay through the customs duty through IceGate online platform. With that, then it is up to you what instructions you have given to our vault partners. As of now, SQL is our sponsor of this event also. Their vault is ready and it is there. There are other vault providers are also coming. So that's what it is. But then you will say, Mr. Gautam, this is just a small thing which you are telling me, ye dil mange more, because I am in Coimbatore, I am in Chennai, I am in Indore, I am in some other parts of India. Why should I take delivery from Gift City? Fair enough. We are already working with the Department of Law and Justice, where we are taking an enablement, and that draft is already work in progress. We should see the results very soon, where any SEZ where there is a bullion vault, we can classify a part of it or that whole vault as a IFSC vault. So that means the bar, bullion bar, whether silver or gold, it comes in that vault, say Sri City, say any other Seebs or you name it, the bar comes there, that can be converted into a bullion depository receipt and traded on exchange, and we can give you delivery from those centers. So we are thinking what you want. As I said in my opening statement, this exchange is for you. This exchange is not for us. This exchange is not for our promoters. This exchange is for you. If we are in a position to bring value to you, this exchange will flourish, and I am sure we will do that. So this is where we are at this point of time. For other things, I think we'll take the questions as they come, and then we will keep on answering.
On the transaction flow changing from the present consignment system, I think I just want to add that I do not see much change from the present system. If you have a T+0 contract, so basically the guy who's trading on your platform is buying on your platform. The suppliers are like just keeping that gold, but the dollars are not going for that. The dollar will go once the gold is traded. And when you are having a T+0 contract, it means people are buying only when they need it in the DTA. So they will, so that way I do not see much of a challenge that there will be a huge amount of additional dollar flow which will happen initially. Of course, later on when the same trade keeps changing hands and you have various other contracts, then this situation might arise and you need to work on those solutions. But yeah, but initially I do not see much of a challenge. So coming to the motivation from the supplier's point of view, and banks, overseas banks included. So why do you think they should come and trade on the exchange? Why should they offer their metal on exchange? I think they're very happy in the existing system. It's doing pretty fine. They do not have any challenges so far. I do not think there has been any instance where they have lost money in India. And so why do you think they would be motivated enough to while we have seen stories, the success stories elsewhere, but are we actually on those following the similar kind of lines, or do we have a different kind of activities planned here?
Okay, I think it's a very fair question, and I mean, this is the question which we ourselves asked among when we were brainstorming that. I mean, what value I bring for the supplier also. So if I don't bring the value for supplier, why will they even come to me? Because the other two routes are still there. But let's understand, what we are trying to do is that what we are saying, so in today's consignment model or the route through which, so bank becomes an aggregator of that order. And they have their own customers. Similarly, I mean, so there are 16, 18 banks who are they have various categories of authorizations from Reserve Bank of India. At some they can onboard new clients. For some authorizations they cannot onboard any other client, whatever there is existing client, and all sorts of things are there. But what they do, the banks they aggregate the demand of their clients. And then they say maybe 50 kg in Coimbatore, 100 kg in Chennai, another 50 in Indore, or 200 kg say in Ahmedabad, or 300 kg in Bombay. So like that, they collate the demand, and then they say, okay, this supplier, they go say, I have this demand, various suppliers are there, they check up, what is the premium you are quoting, X different locations, the premium is logged, order placed. And then the moment it hits the shore of India, premium is paid out, customs duty is paid, and it comes in, and then slowly it gets. So what we are saying here is, instead of different players trying to aggregate different demands here on exchange, we would have a large from all India the buyers coming together. And the sellers can understand, based on their various factors of seasonality, the premium, the price differential which is there, and the likely demand to come because of various seasonal effects. They can always plan their inventories, which they can just put it at one location. They need not take a 30-day exposure on any of the banks. Because the premium which is initially agreed upon also has this cost of this 30-day consignment period, and so there it becomes just in time inventory for both seller as well as the buyer. So this is one value which we believe that sellers will have, that okay, now I have all India clients at one go. I need not say that A, B or C is my client. A to Z or A to Z, everybody is my client. And in an anonymous way on the exchange, if I give my best price, my metal will get picked. So the two things will happen. So right now it's only coming through the banks. What we believe and the way we will move forward, it's not only the banks. There are other big bullion dealers who might like to come on our exchange, and we would also certainly be talking, and we have already started talking with the large mints and refineries to come directly on our exchange. And once they see that this exchange is functional and it adds value to the price discovery piece, we believe that the consumer ultimately will get a sharper price a transparent price, in a much democratic way, they will be able to access that gold, whatever is the requirement, and they can certainly access that gold in a just-in-time inventory. The similar thing will happen on the supplier side also. He need not block his 1 ton, 2 ton, 3 ton at this location, another 500 kilo at other location, without knowing that ultimately whether it will get picked up in 30 days or 60 days. So here, depending upon the location where they want to keep, they can bring the gold and it will be sold on the exchange on a real-time basis. They will get their dollar the same day or the next day, depending upon the dollar clearance cycle. And we believe that because of that, it would be in their interest that they also start testing water through sale of their gold bars or silver bars through exchange. And if we are able to provide them sufficient volumes and a faster churning of their receivables, I am sure they will see value and they will come on the exchange. But nevertheless, we would welcome non-bank players also to come, as long as they meet the requirements of the exchange of what type of gold bars or silver bars are required to be brought in.
But sir, one thing, isn't it going to add cost to the supplier? Because today supplier is, he is having a contract with one banker and he is very comfortable with the bank, and bank has a direct customer, linked customer. So in a way he gets money almost immediately. Here he has to deposit money, deposit his gold with the exchange vault. He has to get, supplier needs to get this converted into a bullion deposit receipt. Then one fine day, initially the buyer will not come easily. So buyer will come, buyer will buy bullion deposit receipt. Then he will get it converted to, he will rematerialize that bullion deposit receipt, and buyer, supplier will get money. So don't you think it is going to add cost to the supplier? And secondly, another important thing, today supplier and buyer have one-to-one relation, supplier and bank have one-to-one relation, but after this there is going to be lot of competition. So supplier will have to probably, for a better price discovery, there will be discount offering on the exchange. So what is there in store for the supplier to come on the exchange?
I think a very fair question from the supplier's point of view, and that is why we need a marketplace called exchange, where there is a better price discovery and ultimately the consumers benefit, and that is the goal of the exchange. I am sure when the consumers benefit, the suppliers also benefit, because I explained to you the three things. One is so just to tell you, in the consignment mode, when the gold comes, they get dollar only when the gold is priced. Till the time gold is priced, they don't get their dollars. So that till then they have, the banks have taken an exposure on that counterparty bank, and that is the capital cost which they are paying, or the lease cost they are paying internally. And this is all built in, and ultimately the consumer pays for it. So that is one point. So here I'll tell you, sir, this whole process of, so I'll talk about this also. So we have SQL, and there is a panel discussion after that, and I'm sure you will all hear from him, our vaulting partner for this conference, that this whole process of from bar to BDR is a seamless process. This is all done digitally, and this doesn't take much time. Similarly, as I explained to you, from BDR to the bar conversion, I have already said within 30 minutes the information is available with the customs, and whatever time the customs take for preparation of custom challan and payment, that is the only time it is taking for. But what I'm also saying, the moment the trade gets done on the exchange, your dollar gets released for payment to you. And also a wider set of market which they will get. But I take your point that on day one there is no certainty whether the banks will come and they will have. So again I get this query from so many of even the qualified jewelers. Or if I come to your exchange, whether I have an entity in Singapore, whether I'll be able to buy from that entity from Singapore on the exchange? No, sir. So on the exchange, it's all anonymous. You do not know. The only thing is guaranteed is the quality of the gold which we have specified from which refineries and what type, that will be available. But who sells and who buys, it will not come to, you will never know it on the exchange. And that is where it makes it very fascinating. There, if I can use that term, there are no side deals cut. No, sir. It's all a transparent transaction which is happening on the exchange. And that is what I am sure, you heard in the previous panel that somebody said, okay, you start cutting the bills and you will see, banks coming to you. And similarly here, as we see more and more volumes coming on the exchange and both sides understanding the benefits which are accruing to them, trust me, it will happen. So let's go back, what happened on the equity space when it was all your paper shares. And you see the kind of, if I can use that word, abuses the investors were suffering from the, not so transparent promoters. And ultimately when everything moved on to online, digital, and so many innovative other products came over it, and I think everybody benefited. Today, I think you are never worried whether you will get a share or not if you trade. I mean, earlier this was never a certainty whether you will get it, or whether you will get it a forced share or you will get a share which is actually somebody else's share. All those kind of things were there. So we have moved from there to here. And trust me, in this whole bullion space also, when we move to the exchange space, things will happen. But let me just add, when that, why I rake that issue of, cut the bill and you will see the banks will come. So what I'm trying to say, once we are on the exchange and we say, and I made an opening statement that this will be our bedrock. So once we show a sufficient number of silver and gold getting into the country through our exchange, and there is a decent enough volume for us to show, we'll be able to build up lot many financial products based on gold and silver. And as we go, or I don't know whether those questions you're going to ask me, but if you're asking me, I'll wait for that. I'll tell you what more financial products we are going to build on exchange, which will be on gold and silver. And all this is ultimately going to support the whole financial ecosystem which we are trying to build around the bullion.
So unlike equities where the share could either be genuine or fake 100%, gold is not like that. Gold could be, genuine to some extent. So that is why the standardization is important, and that is where I think you need to let the audience know. So what is happening on the standardization? People, will they get more trustworthy gold now? And will they get more trust from their transactions at the exchange?
Frankly, I don't want to name names, but we know there have been entities and banks who have imported non-standardized gold in the country. I don't want to name it. You all know who they are. But let's talk about what we are trying to do. What we are trying to do at this point of time, these will be LBMA approved bars from LBMA approved refineries, and there are various checklists which are available. So the gold which comes will be from the source with the packing list, all things checked. In the depository, not only that, we will also have a assayer there. So if you have any time doubt, we can all get it tested for you if those things are there. But also let me tell you what we are looking at. It's a digital gold essentially which is getting traded, the BDR. We are also working on a blockchain solution, though that discussion is still on. We are working on a blockchain solution, so it's on a distributed ledger basis. The holder of the BDR knows which bar number in which vault, in which the vault service providers it is kept. Probably you will also know in which shelf. So this is only one piece. We are also going to come into this whole Digi Gold space, where we will be launching blockchain based solutions backed by physical gold for global investors to come in. for NRIs to come in. Right now, so much of India's dollar goes for gold investment outside, in Dubai, in Switzerland, in other countries. Why not in India itself? We have seen what happened during Ukraine trouble. Even the sovereign money is not safe. The sovereign gold which is in some other person's vault can be stopped. The sovereign dollars which are in some other central bank's account can be stopped. Then why we have some of the best vaulting facilities which we can create. We have the cheapest vaulting facilities which we can create in the globe. So why not we have the global vaulting coming to India? And at least our own gold can we not keep in our own vaults rather than the Bank of England vault or some other such. I mean, these are the, not today's plan, 5 to 10 years down the lane, but these are the things worth talking. These are the things worth debating. That's what we all have to think of and move forward. I would also like to mention one more thing here, that in this whole space, kindly understand that globally there are trading centers, but they are not consumption centers. You are a very big consumption center. So it is high time that the gold as such which is coming, we have a say in its pricing. We have a say that that we set the global benchmarks for those price discovery, and also vaulting solutions, other financial products around it. And we want the global investors to come here and put their gold with us in IFSC vaults. And why not? I mean, these are the goals worth aspiring for.
Sir, you have mentioned about the gold which can be imported through the International Bullion Exchange. It will be all LBMA gold, or even Dubai good delivery is acceptable?
Okay, so as you all know that at this point of time what we have enabled is the LBMA good delivery bar, but it is always that this is a starting point. We are also very much aware that Government of India has signed a free trade agreement with UAE, whereby X quantity of gold will be imported from UAE at -1% of the duty which is prevalent. And then from 120 it will reach slowly up to 200 in 5 years, and then it will be 200 every year. So this is, so that means, so let's understand, within India, this is LBMA bar which is coming in, it is a UAE good delivery bar which is coming in, and also non-standardized bar which is coming in. The gold is coming in the form of doré, gold is coming in the form of scraps. There is internal gold, internal scrap which gets converted into bars, or and we have our own refinery capacity of 1,000 or 1,200 or 1,500 tons, which is whatever is today at this point of time. And that is all where, in this whole ecosystem, we'll have to find a space. Probably, I mean, you are talking about UAE good delivery. I am actually thinking 5 years ahead, where I say we'll only talk about the India good delivery bars, where we will set the global benchmarks. We are actually becoming part of the global gold integrity project, whereby, if we all understand, we don't have the gold mines to support the gold requirement which we have. So ultimately, we'll have to import. So we'll have to be actually part of the global integrity cycle, where the gold which comes to us is the gold on which everybody can trust that it is sourced ethically, it is sourced from the correct sources. And you see, not only LBMA, but I think if you see the UAE gold good delivery conditions, they all are committed to whatever LBMA piece is committed to at this point of time. But we will see, we will cross the road as it comes, and to start with, we are going to start like this. And what we are also trying, if the FTA route is allowed through IIBX, then we will launch a separate contract for the gold to be coming from UAE to be traded on us, specific where these quotas or whatever is controlled through IIBX. And that would be one way to start the UAE piece. But we'll see how it goes.
Harish
So is
has a
this-
lot of question on
Is this
UAE
actually a threat or an opportunity for the exchange? Like these trade agreements, like first we have already signed, there could be more signed in the future. So
So I'm just a platform, I mean, whoever wants to come on my platform, I'm very happy
Sir,
to.
you are skipping this question.
No, I'm not skipping, sir. I mean, why it's a threat? I always, Professor Sai just walked out. But, in IIM and all those, so whatever is a threat for someone is an opportunity for someone. So on the SWOT analysis also we all talk, my strength could be my weakness and my opportunity could be somebody's threat or my own threat also. Because if I think that what opportunity is mine is the mine and I'm not going to look beyond it. No, I'll be dead by then. It's a very dynamic word. And James Bond is my favorite series, and Never Say Never Again is the favorite title of mine. But you know what? The one thing, let me just assure to not only you two, but the global audience also, that whatever we are going to do will meet the international standards. Initially, when I started my discussion, it was India International. India is my brand, which I must ensure that it shines through. And how it will shine through? If I make it international standards. If I am able to convince international players to come on my exchange and trade. My ambition is not just this 200, 300 or 400 or 500 tons of gold importing in India. My ambition is that my contract BDR gets traded globally on London, on Chicago, in Dubai. My ambition is that the vaults which are in IFSC controlled SEZs, those vaults, the gold or the silver which is kept there is also used by London operators, is also used by US operators for doing loco swaps. The international banks are doing location swap of those golds because of the high standards of international probity commitments which we have. So these kind of things which we do, if we aspire and we create some of the best standards and benchmarks, I think people will flock to us. I have no doubt about it.
thank you. Mr. Mehta.
Sir, so nice of you ki you are talking about loco swap with the outside the domestic territory. I am to even concerned about loco swap between Ahmedabad and Delhi. So, being very optimistic, but how are you going to achieve it? Are you trying to say that export of bar will also be permitted? Because currently it is just impossible to export the bar.
Right now it's prohibited, sir, but at some point of time I mentioned, we all have to look at, promote something called India Gold. So we have this whole Canada Mint and Royal Mint and, Australia Mint and all these sovereign coins and sovereign, these, whatever you call it, being sold at a premium and all. Why not India Gold? Why not India coin? Why not? We have the Indian government mint is there, but we'll have to at some point of time make it of international standard, and I'm sure it is. But ensure that the global players come and invest in it. Why not? There are some rough estimates which keep going. I might be horribly wrong. But the gold, so gold below the earth, we do not know whether we have enough. But the gold above the earth, I think, is it a very massive number? 65,000 tons, 1,000, I do not know, 100,000 tons?
30,000 tons.
30,000 tons, I do not know.
That's imported by most.
1,000 tons we imported last year, so how could be 30,000 tons? It would be an immense number. And we have not yet opened so many vaults of so many temples. So, there is amazing gold in this country which is. And let's also understand, what happened during this pandemic. Reserve Bank of India increased the loan to value for the gold backed, if you want to come and take a loan against gold. It was made 85% or some such thing, though there was a little bit of a capital cost. And what happened? People had gold with them and then they took a secured loan. Banks were very happy to give that loan. So what you say is a current account deficit and a current account consumption. I always dispute it and I always fight with that argument. It's a capital account. And that's where in the household, when now I'm not getting into the gender debate, please. But when the wife says she wants to buy a gold jewelry and husband willingly pays for it, is because he knows that she's doing a current account transaction, but he is doing a capital account transaction.
Well said.
So that's how it is, whether you believe it or not. And that's what has come in our household survey also. And these are the realities of today's world. And today, if, who is right and wrong, I'm not getting into it. Today, if Russia is saying that at 5,000 ruble, I'm going to sell my gold. Yes, he has got tremendous gold. Russia has got gold, and gold might become a new currency. At some point of time, dollar was pegged to gold. Nixon decided otherwise. They started printing money, but ultimately, if you want to do real transaction, you say, I have gold. This is what is my real wealth. And we have seen in our war with previously with China, when Nehruji made a call, we have those pictures where so much of household gold came. And again in 1991, when we were having that forex crisis, whatever little gold we had in Bank of England or whatever we had to ship to Bank of England to get the dollar credit. Now this is a reality. Then when the country can fall upon that, why not the poor household? They also do the same thing. So in that sense, I really, don't get into this argument that it's a current account consumption. There might be a drain on you on forex because you might want to use it for a better thing. And that's where that whole piece of gold metal scheme, where the gold which is with us, can it be made, can it be brought out and brought into the financial ecosystem? During pandemic, it came into the financial ecosystem. Now, let me also tell one more thing, because you all are here and probably I might not be able to send this message. But we keep seeing from the gold loan companies the ads of 1 page or 2 page Marlapur. I'm not taking the names. These are the defaulters. I want to auction. I have a suggestion. All this gold, let there be no auction. Let it be bought under GMS scheme at a particular rate and be converted into bars. And you will have sufficient number of gold supply for your refineries. Anyway, there are various suggestions and various discussions over various points of view, but I thought I'm going too much to where. Okay,
over to you. Fine. Actually, so this is this additional piece of information which people are always excited about to hear from you.
Okay, sorry, sometimes I become too excited talking about
India
what
being
I
a
believe.
seasonal market for gold, like whenever you have prices suddenly going up and you see no volume happening in the domestic market.
Yeah.
So if these are the situations, so somebody is needed to fund that metal which is sitting on the exchange so that the trading keeps happening. When we are talking about spot exchange, so somebody is needed on the institutional side to play that role. So how do you see that evolving over there?
See, I tell you, I am looking at it in a different way. Don't take me for it if I say it, because I might change my stand tomorrow. I don't want to pay anyone to make market on my exchange. I want them to come to me because they see value here. Number one. Number two, I'm going to come with a product. I'm going to launch BDR based repo. I have dollar in IFSC sitting for which there is no use other than buying the GSEC of US dollar, of US government. What I will say, whatever BDR is kept in your account, you can do repo against it and borrow dollar from the entities in IFSC or whoever is there willing to give you dollar against the BDR. I'm going to launch that product. So you ask, is it a dead asset? No, this asset will generate you dollar liquidity. You want to take it for a day, for 7 days or whatever time, it will be traded on the exchange and we'll do it. We will also launch gold metal loans, we'll also launch gold lease products. All this is going to come, trust me. I'm just waiting for my bedrock to happen.
Thank you.
Sir, we have to discuss about domestic exchange also. We have to discuss about vaulting infrastructure also. But before that, final question. By what date are you planning to start international bullion exchange?
Okay, sir. So, I can share this, there's a correspondence between me and my regulator, but what I have been told to be ready for a trial run, which could start as soon as 18th. I have given them, sir, please, we'll have celebrations when we actually, so ultimately, let me tell this audience, PM has to inaugurate it, whenever PM does it. What I have been told, do actual transactions trial run. I think when I was telling my team that, we have been giving this instructions that please put everything and we have been doing mock trading, for the last 4-5 months. Mock trading is on, I think, from 1st October. But what we are trying to do now is a trial run. I'm just waiting for a final go ahead. I have given them my confirmations, readiness, various things. If they say, okay, go ahead, Mr. Gautam, on 18th, from 18th, we will have a trial run with the real transactions. Which means somebody can bring in their gold, offer it on the exchange for buying, somebody can come there and buy it. And also, if the RBI's instructions come, SOP comes, then also from India, people can come, remit their dollar and import it into India. All that will be possible. So this is where we are. By this, this trial run, we will also iron out any of the glitches. Some of the on-the-go modifications are happening because our ears are on the ground. We are listening to you. We are listening to the regulators in India. We are listening to our own regulator. We are listening to our competitor. We are listening to our foreign banks. We are listening to everyone. Because we don't think that whatever we have till now written is cast in stone. No. We can always change it. We can always modify as long as we understand that we are catering to you, we are serving you. So with those objectives, I think we are good to go. But I'm not saying that we are getting into that 100-meter dash. We'll do little bit of walking, jogging. There is a very famous book. People of my age should follow it. It's run, walk, run. That's how he promotes. You should never run a very low because you'll get into injuries. So you should do 20 steps jogging, 20 steps walking, 20 steps jogging, 20 steps walking, and you will actually get a better time and you will cover a longer distance. But trust me, once we start jogging and running, we'll continue to do that. But at this point of time, you want to walk.
So, as Surendra bhai mentioned that this was the last question from our side, but we'll open it to the audience now.
But before that, can I make a last point, which is because you are now going to open up for the domestic exchange. So let me give my domestic exchange panel a challenge. Sir, I want to link my BDR with your EGR through an API. And I want to make sure that the gold which moves from International Bullion Exchange to your exchange, it moves in a bonded van, whereby there is no need for the one who is importing to pay IGST and take a reversal. So it can happen seamlessly. That's my dream. I have already shared that with Sudesh. I hope IGPC also takes it up. But if that happens, we'll be very happy. And we'll also fund Ella, my James Bond favorite series, Fort Knox, Dr. No. Maybe a gold tunnel from IFSC vault to the vault in the DT area will move the gold. Let's see what happens, sir. Thank you. You have been such a lovely audience. Now your questions, please.
Anybody in the audience, please? Can somebody pass on the mic, please?
Number of delivery centers in India?
Sir, just 1 second. Number of delivery centers, sir, at this point of time, as I said, it is Gift City, sir. From there, you will have to get into arrangements with the, our vault providers, and they will arrange delivery all over India. But as we said, we'll make it more.
Thank you.
Certainly, sir. Yes, sir. माइक ले लो सर. नहीं, वो यूजुअली ऐसा ही होता है सर. वो बंदे से पूछे साहब माइक क्यों नहीं ले रहे? क्यों? मुझे तो मेरी आवाज सुनाई दे रही है. कि भैया आपको तो सुनाई दे रही है, औरों को सुनाई दे रही कि नहीं?
Sir, first was on the delivery locations. You said that you will be adding on to the locations, and then your intention is to deliver location where customer wants to take delivery. So that means that on the exchange, will we be trading on locations or how it is?
Sir, we are working on a model. I'll share it little differently, not want to share it now. But my goal is that on one contract, this will be traded with multiple location prices being thrown. It will be a game changer. but we'll share it little later.
And the second part is, sir, International Bullion Exchange should be promoting the Indian bars also. And we have almost 4 or 5, I think, India Good Delivery bar plus 1 LBMA accredited bar. So what stops the International Bullion Exchange pushing the government to start accepting these bars from day one? I mean, why should we wait for 5 years, not on day one? Why can't we trade on day one? And I think the working can be on the refund of duty. I mean, the working can be done. I mean, I think this will give more liquidity than what the exchange is looking at today. I mean, that's my understanding. I mean,
Sir, ये question will take up during domestic exchange because
डोमेस्टिक से तो कोई लेना देना नहीं है ना IBX का सर. डोमेस्टिक में तो आ ही रहा है बात, उसमें तो कोई स्टॉपेज है ही नहीं. बट इंटरनेशनल एक्सचेंज के अंदर, I mean, if we are talking about LBMA accredited bar, why can't India Good Delivery bar plus another refinery is there? So why aren't we pushing that? I mean, why we are always looking outside for the, that thing? That's point one. And the third point, sorry, the third point is, you talked about the FATA, the UAE agreement and everything. Now, if we are going to have 2 different trades on the exchange, it doesn't look nice. I mean, we should have one exchange with one tradable commodity. Otherwise, we are saying that one is an inferior bar, the other one is a good bar. That's point one.
Okay, let me, sir. I got it. Just hold on. No, wait. If I take it one by one, otherwise I'll get all muddled. So you also should remember your questions, not that I remember your questions and I answer. Okay, so hold on. So let me just answer to this piece. What I did not say that something is inferior or not. I don't like when people try to put words into my mouth. I have not said inferior or anything. What I've said, for this we will try to have so that we can have a control over whatever quantity government wants to route it through us. For that, we will have to have a separate contract so that it is well controlled and we have safeguards for putting it whatever government wants us to do. It is in that context. Now, coming back to the previous question, otherwise I lose track. I know you are going to miss your third question because you will forget it. But let me tell you, because I will give it a little longish answer. Okay. So at this point of time, what we understand, the gold bar export is not permitted. Okay. So that is, there is that answer. But if, say for example, any entity which is in the SEZ area and has a accreditation, because you mentioned about LBMA accreditation in India, has a accreditation in LBMA accreditation, can definitely give their bars to the exchange, right? I also mentioned in my present discussion and speech that ultimately what is the goal? Ultimately goal is that we promote India Gold. We promote India Gold delivery bar. And that's a journey. And obviously we want to take those steps, but it will not happen today because we'll have to first establish a place. We'll have to first establish a platform which has an international acceptance. Once that happens, slowly I think the time will come where India will find its place. I have been a very vocal proponent of India Gold and India Good delivery, and I am sure in domestic space in any case it is there. I just want to understand whether whatever you are able to produce, is it getting fully consumed in domestic space or not, or are you able to produce more which would require export to happen, because from there anything, the bar which is there necessarily is not coming for India. It can also be re-exported, and there are global investors also who can come and pick up those bars. Ultimately the goal will be that our bars, they are treated, if not better, at least at par with whatever global standards are there. So I am actually with you. We do not have a opposite or a adversarial position. The point what you are saying, why you are not doing it from day one? Sir, on day one I am still struggling whether the dollar will flow from there to IFSC or not. We'll reach there. We'll reach there and we all will work together, because it's not that I have to think of something or you have to think of something. It's that whole ecosystem has to work towards it, and there are various government agencies and all with which we'll all work together and we'll work in that direction.
I understand, sir. I mean, the point why this came up was 6 months back when discussion was happening on the international exchange. One thing was there that they were ready to accept the Indian Good Delivery as well as the LBMA bar from India. Now, I think over a period of time, I mean, the mechanism was to be worked out. I mean, Sudesh is here. The mechanism was to be worked out to accept these bars, because today, I mean, it's not, the bars cannot be exported. I think that's the wrong feeling. Bars can be exported, but there is a value addition which doesn't make it viable to export. So point was that if I am able to deliver onto the exchange, I think the RBI and the government should be, they have the comfort that, you know, the bars are traded on the exchange, the money is flowing through the exchange. I think that's the concern of the government, where earlier they never allowed the bullion bar to be exported without value addition. So that was the point why I asked.
So I think the technical issue in that is because since the exports are not allowed, and if the moment you deliver any gold bars at Gift City, they can freely move out of the country. So unless and until this exports are specifically allowed, that situation,
I mean,
otherwise it will be a micromanagement of those bars, you know, who and which agency will take the ownership of that.
You are building such a big system. I mean, it will not be a micromanaged thing, but anyway, I mean, that can be, you know, I mean, as sir said, that they will be looking into it separately.
But I just want to ask you, sir, like you mentioned about that if some refinery is set up in the Gift City, or any SEZ for that matter, so will that, are you sure about it that
and at this point of time they are LBMA accredited, and whenever they become LBMA accredited, because that is what right now it is.
So then you have an opportunity, Bipin.
What, to set up a refinery there? वैसे पसीने आ रहे हैं सर, यहाँ रिफाइनरी खोल के।
सर बहुत गर्मी है, मैं तो आपका रिफाइनरी पे तब गया था जब वहाँ पे ईंटें लग रही थी, आपको याद होगा, सोना रोड पे।
सर अभी आ जाओ, अभी और भी पसीने निकलेंगे। So one last, I mean,
he's being modest actually.
One last thing, I mean, you know, when I said inferior, I was not meaning inferior per se. The point is, you know, Dubai has a question mark today. I mean, when you look at the bullion banks overseas, I mean, I was talking to someone this morning. I will not name the banks, but all the big banks, I mean, major banks who are supplying into India, I mean, they are not buying a bullion bar of Dubai origin. That's what I have been told. Now, suppose tomorrow, when the bullion bar starts coming in, are we looking at one-way flow only, or do you think that there will be opportunities where these suppliers will be start buying from here also? Because today, I mean, maybe big people like JP Morgan, Standard Chartered, Citi, they will be interested in, you know, selling into the exchange so that the traders buy. What happens on the reverse side? I mean, how the reverse mechanism is going to work if there are no Indian good delivery bars available on the exchange?
I think the way forward, if I may respond that, the way forward looks like, you know, if you pitch it a little differently, rather than saying that you're exporting the bar, if you pitch it like you are just doing the job work on that bar, maybe that is a different way of putting it up.
Job work not allowed. Anyway, I mean, if I deliver or any other India good delivery delivers, it becomes an export. You know, the way the international exchange is set up, and you know, so the word exports comes into the picture, and that's the big issue today.
That's it.
Which should be, you know, I mean, you can look at it and address it later on.
Vipin, you know, I'm not getting into any judgment about, you which bar has question mark or not. I mean, because see, even where we have seen various aggregated refineries, they are suspended for some reason or another. So let's not get into this debate at this point of time, because
I'm not making a question of that. So I mean, I clarified myself that the point, you know, when I use the word inferior was not meant for that. My point is, as I said, I mean, I think it will be up to the exchange to work with the government to, you know, make them understand that accepting the Indian good delivery bars will make more sense for the exchange liquidity. That's my point.
Your point well taken, sir, and appropriately this will be taken up.
Any more questions?
Sir, आपका third question याद है नहीं भूल गए?
यही था, third यही था.
यही था वाला? अच्छा अच्छा. तो मुझे ये तो suggestion लगा, मुझे question में था. Okay, हाँ.
Hello, Premnath here. One thing which we could mention instead of export, maybe toll refining world will be better. I think when they import Dore bar here and then they toll refine it and give it to Gift City or wherever they want back. So instead of using the world export, I think toll refining, which is worldwide, it is used. That will be a better thing to say instead of saying export, and that should be, I hope, very well accepted in the government circles also, because they will be getting some fee for toll refining. So that can be shifted to Gift City, and Gift City can convert that into BDR and can be sold it out.
I think, sir, one of the reasons and purposes for this kind of conference is that, we get suggestions like Vipin mentioned, you mentioned. And I think these are something which we must take it as a work to do.
Correct.
And not only we, you all also have to, push from you are also a very important constituent. So you also have to push through your constituents whom you have elected and represent to the government. Yeah, these are the things which we must do. And obviously from our side, as an exchange, we keep talking to regulator, we keep telling them so many things, and we keep pushing. So as I told you, behind the scene, number of things happen, sir, which, take lot of time. And these things are happening. Actually, we are very happy, the changes which from my parents to my generation happened and what are now happening from me to my sons and maybe from son to the next generation will happen. The pace is enormous. And within India also that pace is enormous. And I think we are in very good times where a lot of these new things are happening, a lot of new ideas are flourishing. And the government is also very open for many of these suggestions. And I am sure whatever Vipin has said, whatever you have said, many of these things will be taken up. And maybe 5 years is too long a time. Maybe before that also this can happen, sir.
Sir, another thing I would like to know from you is regarding the liquidity in the International Bullion Exchange. So right now, I think I am very happy that 30, as you have told, 30 qualified jewelers have already registered and maybe 17 are in the pipeline. So apart from this, nominated agencies, nominated banks and nominated agencies, they are very important players so far in the market. So what is the progress in that to onboard into International Bullion Exchange?
We would love them to come, sir.
But right now RBI has not yet come out with any.
So we'll go one by one. Let RBI first allow the dollars SOP to come. Let that SOP come, sir. And all those things will happen, sir. We all see there is always a time for something, and as long as you are not shutting me with no, I know there is a opening available.
And
I always believe in that.
For the supplier side, any number.
And even if you are saying no, I will be persistent.
No, that is very good. So
that's how sometimes we all get married.
Correct. No means yes.
No, I don't say that. We wait for the yes.
Okay. And what is supplier side? Any listing from supplier side you have got into?
Sir, there are many players who have already registered. So any international player or any IFSC player who has come on my exchange is a potential supplier, sir, because they can freely buy and sell. And the problem is only on the qualified jewelers that they can only import.
Yeah, they can't trade on the. I believe qualified jewelers can only buy and import necessarily. They can't sell it again and again.
Sir, we'll wait. Let us start.
I think we have time for one last question, please, from the audience, and then we move to the next section. Yeah. We have any more questions now? So or we move to the next segment?
Yes, I think.
Okay. Thank you very much, sir.
Thank you, Ashok.
Thank you, sir. Thank you.
It was really a pleasure.
Thank you. And thank you, lovely audience. Thank you very much.
Listening to the past 15 minutes of maybe more of vibrant conversation, I think it would not be too much to say that the name is Gautam, Ashok Gautam, huh? Good.
Thank you, ma'am.
It was a pleasure hearing you, sir.
Thank you.
So I now invite the panel for sharing views on the domestic spot exchange. Mr. Nagendra Kumar. Sir, if you could please walk to the stage. Mr. Kumar is the Chief Business Officer at National Stock Exchange. He pioneered the idea of listing India Good Delivery Standard and was instrumental in taking the gold options successful product. Mr. Shivanshu Mehta, Head of Bullion Business at MCX. The list is too long for the many of the first seal launched under the leadership, under his leadership. The script. Mr. Ranjit Singh, BSc, an accomplished leader in commodity trading, handling different assignments throughout his career. Mr. Sharad Jobin Putra, Chairman of Seco Logistics. To his credit goes setting up the vault at Gift City and also the first one to have it recognized for domestic spot exchange. Mr. Chamandeep Luthra, Head of Brinks Bullion Business at Brinks India. To know the pulse of Indian trade just call Mr. Luthra, as they say. Having worked with global vaulting agencies, he brings a vast experience and expertise in localizing the strategy for Indian market. I welcome you all. Thank you, sir.
So till now, we have heard everything about International Bullion Exchange. We are now moving to domestic exchange. And let me tell all of you that it was easy to set up an International Bullion Exchange, but it's very difficult to set up a domestic exchange. Finally, after what we are hearing, you will come to know why I am saying so. Because आपको एक हमारे प्रेसिडेंट का एक डायलॉग है वो बताता हूँ. जान है तो जहान है, किस्मत तुम्हारी गुलाम है, करो कुछ ऐसा कि खुदा भी तुमसे पूछे कि बेटा तेरा प्लान क्या है. और इस वक्त मेरा प्लान है डोमेस्टिक बुलियन एक्सचेंज सेटअप करना. एंड इट्स रियली डिफिकल्ट. एंड व्हाई इट इज डिफिकल्ट, व्हाट आर द हर्डल्स, वी आर गोइंग टू डिस्कस दैट. एंड let me begin with Nagendra ji. Let us first explain the whole transaction flow of the exchange, given that there are going to be multiple routes available to import gold presently, and how likely this value chain from importers to traders to jewelers will move to the exchange route and provide enough liquidity on the exchange.
Is that one question? Can I have that paper next?
You will have all such difficult questions now. Everyone will have, not only you. Shivanshu and Ranjit will also have.
So, good afternoon to all. It's an honor to be here. Thank IIM and IGPC for giving us this opportunity. So, before I respond to this question, so we just wanted to mention that NSE had signed an MOU with IBJA, and we have proposed and we have decided to come together to set up this domestic export exchange. And NSE is going to have 15% share in the entire setup. And IBJA is going to have 49%. When I say IBJA, all the bullion jewelers, bullion dealers, they are all going to have 49%. Since we have a minor's stake, ideally Surendra Mehta, who's representing IBJA, should be answering the question and not asking the questions. But having said that, from a transaction flow perspective, it is no different from what Mr. Ashok was mentioning. So the entire transaction will happen in the form of depository receipt, where you trade, actually the end product is a physical gold, but the gold will get converted into receipt, just the way how ETFs are created. So you deposit the gold in the vault. There is a vault manager here. So you have a vault linked to a depository. So all the investors who go and deposit the gold will get an electronic entry in their demat account. They approach the exchange and they are ready to offload whatever it is on the exchange platform. So when there are multiple routes available, why do you need an exchange? It's a very interesting question. So I have responded to this in other forums also in a very different way. I just wanted to give an example. So till 2008, the FX market was completely OTC. In the sense, you never had an organized exchange platform. It was all OTC. So whenever you move anything from an OTC market to an organized and regulated market, I'm sure I don't have to explain the rich audience here what are the benefits. The benefits are obvious. I mean, so transparency, you get a better governance structure, and everything is in open. I mean, Ashok used a nice word saying you cannot cut deals, right? Because you're doing it on the exchange platform. So from 2008, we are 14 years since FX moved into the exchange platform. And today, the number one broker, NSE again, I mean, though we may be world's largest derivatives exchange, I mean, with a lot of humility, I will say that in India, we dominate close to, on the FX side, we are 75% market share. So my competitors here have the other stake. So today, as we speak, the largest broker on our FX is not a bank. So what I wanted to say is when things move into an organized way, disintermediation happens. You have lots of new players coming in, a lot of innovations taking place. So even though you have a channel which is up and running, and if we go by the numbers which in the previous panel you people were talking about the yearly imports, how much delivery does it happen on the exchange platform? Not even 1%. So most of the transactions are OTC in nature. So the whole idea of setting up this exchange is why don't you bring everything into a regulated environment? And you have to wait and you will actually see the benefits getting untangled. Thank you.
So actually price discovery seems like a very fancy word in Indian context, so as to say in the present scenario. How does that price discovery happen, like in the way, we have various kinds of supplies. We have normal imports. We have imports where the whole duty is payable. Then there are imports through the domestic refinery channel where there is an arbitrage of 0.65%. Then we also have these trade agreements now, 1% arbitrage. So how does exchange handle all this? Maybe Shivansh, you can take this if you may.
Sure. So I'll just begin by saying that in the commodity derivative space, as you know, MCX is the single largest exchange. And in bullion, we have about 99% of the market, just like Nagendra was mentioning about Forex, right? So I should mention before we get into an intense discussion. More importantly, price discovery is a function of, according to me, one, the design of the contract, which in the domestic exchanges case, I'll use that word, or in MCX case, is inclusive of the custom duty, and it it has the international gold price as well as the currency exchange rate, thereby reflecting the spot price perfectly. It also has a 98 to 99% correlation with the international exchange prices. Therefore, it becomes it is a compulsory delivery contract. So all these things, when read together, they make it an ideal tool for hedging as well as for giving and taking of delivery. Delivery, whenever there are disparities in the market, as you would have seen recently, or as you saw in 2019 September, where we had the highest silver deliveries in any given single contract of 140 tons. And Sharadji was part of that, so the world saw that much silver changing hands. All this is possible, and till now, we've had only bi-monthly or monthly contracts wherein delivery happens only at the end of the maturity. So while we are using the word gold exchange, spot exchange, let me tell you, everybody is not moving in that direction. It is essentially a different contract. So we are probably thinking of launching it as a segment, thereby, in due course of time, making it more user-friendly or more beneficial to people who today use the F&O on our platform in any case. Once more fungibility is set in, a spot segment, a future segment, and options all together in one roof, on one screen, under one exchange, is probably, and that is our thought process, a different way to look at things. And we, so far, we are towing that line. As far as price discovery is concerned, we already have multiple contracts, to answer your question, which are of different denominations, right? All of them have a efficiently discovered price, the liquid order books, etc. And spot will be one such more contract, which will come in. It will be presenting a T+1 type of a delivery setup, and then you can magnify these numbers. Now, when I say we've had 3,700 tons of silver delivered since inception, or 126 tons of gold delivered since inception, it is through our bi-monthly and monthly contracts. which are essentially futures contracts. Tomorrow you're talking about a T+0 spot contract. So you can very well imagine. And another important aspect we must remember is spot and deferred contracts the whole world over. Whichever exchange you talk about, Shanghai, for example, they move hand in hand. Here is a spot, there has to be a hedged position taken in the futures or options, and vice versa. So we see this developing dynamically in this type of a direction.
So Nagendra, just to add to the question which I asked, like how do you ensure the liquidity if you have multiple kinds of contracts so for a price discovery to happen you need to have a number of buyers and sellers, and so that is something which today it looks like, are we actually trying to resolve that situation that in the future we should have only one pricing even on the, because duty plays a major role in the in pricing. So and I'm sure when you're dealing with different kind of metals you may have different contracts and all. So that is one thing which I wanted to ask, whether you have put some thoughts on that.
See, the whole idea of setting up an exchange, domestic spot exchange, is that, the government's vision is that since we are a largely gold consuming country, do we have to follow prices or do we have to set prices? I mean, personally speaking, to set prices, I think, it's a long shot. And to answer to your previous question, which Mr. Shivanshu responded on price discovery, right? It's no longer a jargon. You said it's a jargon. I mean, price discovery is an efficient way of arriving at a price, right? Instead of two people, bilateral transactions, you have large buyers and sellers coming in, and it's actually the economics which kick in, right? The demand and supply through which you arrive at a price. And see, the best part about this panel is whenever Shivanshu is next to me, I mean, so he comes up with a lot of things which will make me wonder, saying, these are the things that we have to do. Because I have to compliment Shivanshu for the simple reason that even when we were launching India Good Delivery, there were a lot of things which were not part of the framework that I was designing, right? So, and Shivanshu used to say, NSE should do this, NSE should do that. I used to, internally say, thank you, Shivanshu, thank you. And, we have got that implemented. So even now, even now he was saying that, he has got an efficient derivatives market, he's got an options, futures and spot. I mean, that's a brilliant idea because we are going to set up an exchange. And nothing stops us from launching just a spot. I mean, we can launch a futures exchange also because it's going to be a universal exchange. And with industry support, right, when 49% managed by the top bullion players and jewelers, and your question on price discovery automatically, kicks in. I mean, they are there to bring in the supply, they are there to come with the demand, and price discovery automatically steps in. Thank you.
Ranjit, this question is to you. मैं थोड़ा आसान कर देता हूँ समझना सबके लिए. देयर आर टू मैकेनिज्म इंडिया में. गोल्ड दो तरीके से डोमेस्टिक एक्सचेंज पे आ सकता है. एक इंटरनेशनल बुलियन एक्सचेंज में इंपोर्ट हुआ, उसके ज़रिए इंपोर्ट होके वहाँ से बीडीआर बना, बीडीआर से किसी ने ड्यूटी भर के उसको माल इंडिया में ले आया. दैट इज़ वन वे ऑफ डूइंग द थिंग. दूसरा, एक रिफाइनर ने डोरे लाकर रिफाइन करके इंडिया में माल ले आया. और तीसरा, डायरेक्ट किसी ने बैंक के जरिए इंपोर्ट करके माल इंडिया में ले आया डोमेस्टिक एरिया में. इस तीनों सिचुएशन में आप जीएसटी का पेमेंट पहले कर देते हैं. जब आप माल इंपोर्ट करते हैं तो जीएसटी का पेमेंट कर देते हैं. फिर जब आप वही माल आप डोमेस्टिक एक्सचेंज के वॉल्ट में डालते हैं तो इट विल गेट कन्वर्टेड टू ईजीआर, दैट इज इलेक्ट्रॉनिक गोल्ड रिसीट. इन इंटरनेशनल एक्सचेंज इट इज बुलियन डिपॉजिट रिसीट. इन डोमेस्टिक एक्सचेंज इट विल बी इलेक्ट्रॉनिक गोल्ड रिसीट. How do a person ensure, or a bullion dealer or a refiner ensures that his GST is refunded immediately? Because this EGR will keep trading for 1 year, 2 year, 5 year, 10 year, and the person may not take the delivery of, or may not rematerialize the EGR into delivery. Then how do a bullion dealer gets a refund of GST on the domestic exchange?
Thank you, sir. As Mr. Mehta was asking about how the GST part will be handled on EGR, I think he is the best person to ask, because he is running behind the government of India as well as SEBI, and he has given a lot of representation to SEBI the way the functionality of GST handling on the EGR can be taken. And so there is I think, kindly correct it, there is a provision in when you import a gold, when you pay a basic custom duty, when I move it to DTA, there is exemption for GST. Is it right?
Only when you move to STZ.
Only to STZ. So if we can get a provision for moving from conversion from BDR to EGR, as Mr. Ashok has also suggested, that try to accept my BDR to EGR, directly paying custom duty exclusive of GST, I think that portion will be handled without GST. That later when it will converted to EGR to physical, then the duty, the GST part will be. Next question was.
No, so what?
I think
he's talking about fungibility of BDR to EGR without payment of GST.
Yeah, this is what I am telling. At the time of import, some nominated banks are exempted for payment of GST at the time of import.
I think 2017 circular was there, and 2018 May Diamond India got that.
Not just fungibility, even few banks which have got
nominated banks. I think 24 entities
Except for
are
one
there.
bank, every other
Everybody
bank
is
is actually
Two
allowed.
banks, I think. One is RBL. No, they are not got
Okay,
exempted.
two banks, ICBC and RBL.
नहीं क्वेश्चन इतना सिंपल नहीं है सर. वो तो मान लीजिए जितना माल इंटरनेशनल बुलियन एक्सचेंज से आएगा, अशोक जी उसको एग्जेम्पशन भी करवा देंगे. तो लेटस, लेकिन जो रिफाइनर के पास में 400 टन माल आ रहा है, वो तो ड्यूटी भर के ला रहा है, वो कैसे एग्जेम्प्ट होगा?
So that part, I'll tell you. You only given me one explanation, detail how it will work. I'll credit that. Credit goes to Mr. Mehta.
So Mr. Mehta is actually playing double role here. Actually. So and very conveniently, even Nagendra is also.
Suggestions came from.
No, GST and SKT, I mean, since it has got notified as a security, these two are grey areas. Until unless we hear from the government, I don't think, anybody in this panel is competent enough to respond. This is my view. I can stand corrected if there are other views.
That's the right view. That is the right view. In fact, beyond this, there have been certain suggestions which have been, sent across to the government. We have been part of certain meetings along with regulator where Ministry of Finance has been present. We have offered various, options. Mr. Surendra Mehta is aware. These were discussed in our internal committees as well. That either you have a dealer entity in the middle who takes care of the GST aspect. See, the depositor who's initiating the goods, he cannot be left high and dry that, your offset of GST is up in the air. That has to be sorted. Imposition of only IGST has to be looked at. So I think, and the third thing which I mentioned about the possibility of a dealer route. So Mr. Mehta is the only one who has further updates.
Yes.
So the next question could be like to the exchange experts, not particularly the promoters of a particular exchange. So in that capacity, you may consider that. So what are we looking when we are looking at this as a spot exchange environment? What do we have in store for people looking for their working capital needs? The industry players who are looking at the working capital solutions. Do they still need to go to the banks, or how differently things will emerge?
Nagendra.
See, this is a spot market. Today, I'm not sure if banks are in a position to take metal in their book, nor they're in a position to fund. We are trying to face a similar challenge. We are actually facing a similar challenge in IIBX scenario as well. So in terms of their working capital needs, being a spot exchange, I think, it's a cash and carry model, right? You have to bring in the appropriate funds, and unlike the international scenario, there are no challenges in terms of moving money because you have an efficient RTGS which is up and running. So we have constructed a model in place. I mean, since I'm sandwiched between my competitors, we will not be in a position to disclose as how the model will be much efficient in terms of, how it will address the industry needs. Thank you.
Mehta ji, I think.
My next question to Shivanshu. Shivanshu, will bank participate in this domestic exchange?
See, this has for long been desired that. Sorry. Yeah, this has been long desired that banks should participate in commodity derivative segment in the domestic side. Banks have the potential to create a lot of liquidity. Of course, banks have been canalizing agents only so far as their role in India is concerned. This is where it stands. Now, if you see there have been so many positive regulatory changes which have taken place. You never had a situation in which bank subsidiaries could act as brokers. Today you have that. And let me tell you that they are playing a decent role in terms of getting retail participation. It also goes a long way that when we have corporate hedgers, their comfort level increases much more when you have a bank as a clearing member, etc. Their balance sheet comfort comes in, etc. So that will definitely go a long way in the entire segment, not only in the spot contract. It will be very beneficial. Another positive development has been the eligible foreign entities circular, the FPIs. Now, all these changes, we must praise the regulatory framework, and SEBI has been so proactive in bringing these to the commodity derivatives market. I'm sure, given the pace at which this has come, it may only be a matter of time.
It's just that they need to understand that it is actually a requirement of the trade, because otherwise, if the dialogue doesn't happen, then it doesn't move in any direction actually. So anyway, Mehta ji, you want to do it?
See, as far as I think price discovery is concerned, I still have my own concern, because when you talk of price discovery, we have an FTA where duty is 1% less than the normal duty. Then we have refiners who are given 0.65% benefit. Then we have scrap market of about 200 tons. How are we actually going to determine the price discovery without market being distorted? I don't see it is impossible, but I don't see this is possible also, because our ultimate objective to start the exchange was to discover the price. And if we keep adopting the route of FTAs, then where is the price discovery? Ranjit, what is your opinion on that?
As you said, there are a lot of agreement which government is keen to do with other countries. Especially one is already over with the UAE. I think Australia is in discussion part. See, the duty differential which is there, it is always plays an important role in determining the prices. So if we cannot launch all the three contracts in the same, because until unless there is a demand supply which matches up to the duty differential of 1% or 0.65% in the DORE, and till then we don't have a same contract running, which is gold coming at duty of 10.75, UAE coming from 9.75, and DORE which is coming at 0.65%. I think we should think, we need to do some brainstorming before we launch this contract. I think they have to be different contract all set together, cannot run in the same contract. Until unless if there is extraordinary demand or supply which can cover this gap of 1 or 0.65%.
Nowhere in the world you have these kinds of,
This happens only in India.
Yes. So, in fact, Nagendra may take it actually. So, I think we have mentioned in the previous session as well, we are talking about converting BDR into EGR and all that. So, we see some synergies. But is there any competition between the international and domestic exchanges? Do you think that?
No, it's our baby. How can we compete with our Maybe, I mean, we should have used this opportunity to sign an MOU with IIBX to
That's
kickstart
the question actually people
actually
ask.
we should have
So
done that.
this-
I mean, we missed that opportunity. The leading derivatives exchange in the world with IBJA, signing an MOU with IIBX would have been ideal. But I don't see any I think we will complement. If people understand the Shanghai model where, where there are two exchanges, there the main exchange started 22 years ago and the international came in 5 years later. They actually complement one another. I mean, they work in such an efficient manner. And Shivanshu did mention that the spot and deferred go well. I mean, I beg to differ on that for the simple reason Chinese are known for gambling. So if you look at Shanghai exchange, their spot volumes are 11%, 11 to 12%. And the OTC reporting is around 40%. And the deferred contracts, I mean, Chinese men, the Chinese, not, I should not be sounding like a racist guy. The Chinese, they prefer to punt. So more than 40% is on deferred contracts. And if you are a member of the international exchange where people, offshore participants can take membership, they have a route to the main board contract. So that way, they've built in a nice connect mechanism through which both the exchanges are able to leverage on their participant relationship and survive. I think, Ashok was also mentioning that we can have a tunnel. And for the benefit of everyone here, the new exchange that we intend to set up is going to be on the GIFT City. So we have almost finalized the premises and we will bear the cost of the tunnel, Ashok. So you don't have to worry about it as well. Yeah, we will. Only one father is willing to pay the 4 years.
So one thing that emerges is like vaulting plays an important role in the working of whether it is international exchange or the domestic exchange. So Sharadji, I just wanted to provide the audience a brief outlook of the changes which you think now will happen once we start trading through the exchange platform.
We see a sea change in the bullion trade. In fact, whatever has not happened all these years, I think we expect those things will be happening. And in fact, we received one inquiry a few days before where we have been asked to deliver from the spot exchange directly back to back, maybe in overnight, next day delivery across the country, and which we are geared to do that also. So we are capable of delivering, be it a domestic exchange or be it an international exchange. International exchange, there may be little time gap only because of the custom duty payment. Otherwise, we can deliver from that exchange also to across the country, anywhere, fastest possible manner we can do it. And we are capable of doing it. We have done it. In fact, we are doing it day in, day out. So I don't think it's going to be anything new for us. So I can tell you very confidently that if we are clearing something, say a metal from the international exchange at the GIFT City, you want a delivery by the night at Chennai, yes, I'll give you. Okay. And it will be definitely in a cost effective manner. So that kind of a confidence we have and we'll be able to deliver that.
Please go ahead.
Sharajji, I'm sorry.
Yeah, please.
See, this is the first time in the world that concept of depository is coming into the bullion ecosystem, and we have this process of creating EGR or a BDR, be it on the international side or on the domestic side. Is that going to add to the overall overheads in terms of cost, time? Because see, we know from an IIBX perspective the systems which are built in and the efficiency that we are trying to bring in, but for the benefit of the participants, do you want to highlight, is this going to lead to additional, cost, compliance or whatever?
See, it will increase compliance. Okay. Now coming to the cost, in India we are operating at a fraction of a cost which is there globally. So what is the cost of one depository coming in the picture? No, I don't think there will be any significant cost involved into it. Okay. So it's, I don't think it will add to anything significant.
Well, Mr. Luthra, how much capacity is presently available or planned both in GIFT City and in the domestic area, and will those vault be sufficient for the overall requirements?
Talking of GIFT City X vault, we can easily hold around 300 tons of silver and maybe 100 tons of gold over there. And frankly speaking, we have the provisions to enhance the capacity if required. We got a space available over there, and we got a huge vault. So storage will not be a challenge. As far as domestic is concerned, we have got vaults across the country and can easily store around 200 tons, 300 tons of gold at any point of time. So storage that will not be a challenge.
Sir, tell me one thing. क्या ऐसा कुछ नहीं हो सकता कि we have same vault for the international exchange and domestic exchange when there is a fungibility from BDR to EGR, the goods need not move, let the goods be there only in the same vault? Is it possible? Very hypothetical question, but.
Sir, I think that's possible provided the IFCA comes with the guidelines to segregate a particular area inside the vault. Like we used to have private bonded warehouses earlier, where in one vault we have multiple private bonded warehouse. If we get the area designated that this is IFCA enabled vault, approved vault, and there's a domestic vault, so things will move faster. We don't have to create infrastructure in every SEZ. Same domestic vault with the area designated IFCA, it can be done. If the provisions come or the government comes with the regulations, it's doable as per me.
Nagendra seems to be not agreeing to this.
Oh, I don't know. I mean, it's like, having a duty-free gold and a duty-paid gold in one single, but he ended it very well saying if the government is making...
Can we ask Ashokji, what is your view?
See, one point to add, the challenge why we see is, if we put a separate vault in SEZ, that vault is designated for SEZ business only. Then we don't have the flexibility of doing the other businesses to take the ROI. Yes. So no, setting multiple warehouses in SEZs, this becomes a challenge of getting an ROI and the movement of the metal from SEZ to domestic.
Is it no, I don't think it is possible. No,
I don't think government authorities will agree to that. The option for IFSC or IIBX is going to be multiple vaults across multiple SEZs, and which we are ready and geared to do that. We need just 6 months. In fact, our business plan is in place. We are just waiting for IIBX and IFSC to get those approvals, and we'll immediately roll it out.
Nothing prevents the domestic exchanges from setting up a vault for these contracts in SEZs.
Right.
That's one thing very clear. Now, from there on, what Chaman and Sharji are saying, that whether it can be the same premise or a defined premise within the overall, some kind of a perimeter, that needs to be looked at.
So, Sharji, do you see any changes happening in the insurance system the way it works now, where things are more under the control of the foreign supplier?
Yes, see, whatever is going to be under IBX, means the exchange, it's going to be insured by us, and the foreign suppliers insurance will add the moment they put the metal into the exchange.
Mr. Ashok Gautamji was very optimistic about delivering Indian gold in the international market. So are we trying to say that we will build up vault also in the international market?
I don't think he meant that. What he meant is that it can be there in the GIFT City IFSC vault, and it can be stored there. And see, currently what is happening is that lot of metal is stored on a long-term basis, and the same thing can happen at a fraction of a cost. Okay, because if you see the costs in London or US or maybe Dubai, the Indian costs are a fraction of that. And Indian infrastructure is second to none. In fact, it is many times better than the vaults globally. So one should aspire to have that gold coming to India and being parked for a longer time. Like if you look at, with the current situation and maybe the China situation, a lot of investors are concerned about metal being stored in China. So why not in India? And the cost is going to be a fraction of what you have in China or maybe London or maybe US.
When you say, sir, fraction of what is being stored in London or China, it will be how much? 10%, 20%, or?
It's hardly anything. There, you can imagine the cost of volt in London. And a gift city, or maybe in Kandla.
Correct.
It's not even 1/10 many a
So
time.
this is one incentive why an international player needs to store his gold in Indian.
Yes, there is no reason why it should not be and why it can't be.
Okay. Harish.
So do we have any estimates of what are the kinds of capacities available right now in India put together, all the companies put together, all the vaulting companies put together, and how much do you think is going to be the additional requirements? And as he's mentioned about the cost, but do we have an estimate as to how much in terms of the capacity do we have if we compare it with other developed countries, like that is where we aspire to be, So, and do we have that kind of a bandwidth?
Storage will not be a challenge, as mentioned earlier also. Vaults are sufficient, big enough to store around 200, 300 tons in the domestic and 100 odd tons in the gift city also. So that will not be a challenge at all across the country. And at many of the locations, we have got the provisions to enhance the facility also in case the demand comes up. And now with to add, we have started implementing the global standard vaults. And the 3 locations, what we have done, Baikala in Mumbai, Chennai, and in Gift City, we got a UL2 category vault, which I will say that's one of the best category available in the globe as of now. So we are going with that with big capacity, and on the costing, I believe will be much cheaper than the global standards, definitely. What is there in Zurich or in London will be much cheaper than that. The only challenge what I see as on date is the connectivity of the airlines. When that is resolved, the movement of metal between India and other countries will be easier. This is what I believe suppliers might be looking at it, India. So once that improves, I think we can have a better moments over there.
So if you have to break this up, like in the initial maybe 1 year of operations, and then going forward maybe 2 years to 5 years horizon, so do we have any visibility on those numbers? Because these numbers are of course coming from the exchanges only, like you mentioned. Accordingly, you have to work on that.
I don't have numbers. I can't comment on the numbers as of now.
One last question to all the 3 exchange guys. With bullion dealers, OTC platform already existing, with refiners having option of either coming to the exchange or not coming to the exchange, scrap market, whether that gold will really come on the exchange or not. Do you think that domestic exchange is viable, considering that there are going to be 3 exchanges in the country, starting with Shivanshu? Difficult question for all 3.
No, but I think instead of addressing the rhetorical part of it, I will first share something very, very important on the part about refined gold recycling. You see, we set up the MCX good delivery norms for BIS standard gold and silver just a few months back. About a year back, it became exactly deliverable. We have seen more than 1 ton of Indian refined gold delivered via MCX. In a sense, it plays the role of allowing for recycling, allowing for the disparities to go away whenever they appear, because of the compulsory delivery nature of this and the acceptability of the price. As far as viability of 3 versus 1, if there was only one singular exchange which was to come about, all of us would have been a part of it, yes. But now, since it is, so there are certain things to look at. I mean, there is a capping, like Nagendra was mentioning, 15% is a capping on the amount which an exchange can hold in this other exchange, number 1. So I'm not going to say anything about viability or non-viability, but I'm just giving you all the facts on the table. Of course, the other part is that the futures, or let me say deferred contract, right? Deferred contract always gains from the spot contract and vice versa. That's another, and this even Kothari has been using this sentence with me very often, and being an experienced hand, and the China numbers talk about it. Whether it is chicken and egg or egg and chicken doesn't matter. Both are becoming, more robust. Then comes, the setup cost. You're setting up something, you're capitalizing it. Then come the cumbersome membership related processes, the technology implementation at the members and the client's end. Okay, so these are not things which are doable by, a magic wand. You can't, it takes time, right, to deliver a child. So these are the separate things I'm placing before you, and we are all in this for the long run. It's not that viability is the reason why we are getting into it. We all have running contracts today in any case. So this is what it is from my side.
Nagendra ji.
So in terms of viability, definitely there is no room for 3 exchanges. So in India, if we look at the stock exchange history, you will never see exchanges having 50-50 or 30-30-40. It is either you hold a dominant share, 75 plus 100%, or you are nothing. So the way we have worked out our model is that there are n number of years, the way we have structured our financial viability / projections is that in the first n years we will know that whether we are going to survive or whether we are going to perish. To put it in simple terms, 3 exchanges no, 1 exchange definitely yes. And I again extend my offer to our good competitors in case they want to join, 15%.
3 of them.
3 of them. I mean, so that, the world should know that, the offer is still open and they have not taken it.
But Nagendra ji, I have one doubt about, earlier we used to have only 1 equity exchange. When the 2 exchanges started, the competition started, and there is an arbitrage was available only after the 2 exchanges actually came in. So there has to be 2, if not 3, there has to be 2 exchanges.
Sir, arbitrage is a dying business in equity. It is a dying business.
Okay.
Yeah, it is a dying business.
So Ranjit, your take on this?
As Mr. Mehta and Mr. Kumar talked about their readiness for EGR, I'll talk about how BSE is planning. To update you with you that we already got an in-principle approval from SEBI to launch an EGR. We are awaiting final approval. As and when we get final approval from SEBI, as well as the GST part, which is hanging sword on all 3 exchanges. As when we get the clarity on that part, we are ready to go ahead. We already done a mock testing, successfully participated by 115 members. So we are ready, geared up, and technology wise, we don't face a technology because we are have own technology company which can make a system ready anytime, and we are also technology partner to International Bullion Exchange also. So system wise we don't have any problem. Since we coming up as a segment, the only thing as a member they have to do they need to enroll for the segment. There's some process need to follow, and existing UCC which is already are associated with BSE, which are part of USC. We have around 10 lakh crores of UCC registered on our exchange platform. So only thing they need to give a consent letter stating that I want to trade an EGR segment. So it is as easy they can start trading an EGR segment. Thank you.
So we take up the questions now. If anyone has any questions on domestic exchange.
Vipin had some question, yeah?
My question from this set, why are we running for 3 exchanges? In your stage पे बैठे हुए हाथ मिला दो बात करो।
लोग को बोलो।
So
you should ask them.
This is very important, sir, because even today we have 3 exchanges, but where we are today, and it makes sense to have one spot exchange. And I would love to see all the 3 coming together and setting up.
Not only 3 exchanges, 3 kind of gold also.
We have to appreciate Surendra's point. See, having 2 exchanges, definitely there is a merit for the simple reason that India good delivery देखिए, जो leading commodity exchange है 17 साल में कुछ नहीं किया, NSE लेके आया, immediately everybody replicated, right? No. What I'm trying to tell you is that
result कहाँ पे आया? और result कहाँ पे आया? Just like away, no?
Yeah.
Nagendra's left hand seems to be very strong. Nagendra's left hand seems to be very strong, actually.
Any other question?
Arbitration makes there. Today we don't see liquidity the other two exchanges.
Agreed.
So arbitration तो मतलब बाल बचे ही नहीं तो बचेंगे नहीं आगे चल के. And that's why I mean it's a humble request I think.
सर आप इन तीनों को मत रिक्वेस्ट करो, हाँ, क्योंकि 49% तो हमारा, इनका तो 15-15 ही लगना है.
अच्छा, so he's not gonna dilute from 49%, so that's an indication which he has already given
ये
you.
अपना स्टेक बेचना चाहते हैं.
Now coming back to that 49%, सुरेंद्र जी कुछ चिट्ठी विट्ठी भेजोगे पार्टिसिपेट करने के लिए कि खुद ही ले लोगे सर?
नहीं नहीं, बिल्कुल भेजेंगे, सभी को भेजेंगे.
But last I mean thing is I think one exchange will be much better. बाकी आप तीनों के ऊपर है सर, दंगल कर लेते हैं.
So India's leading refiner is requesting for one exchange. अभी भी मौका है, हाथ मिला लो. Any other question? हाँ, so that is why initially I said to make a international exchange is easier, but to make a domestic exchange is very difficult.
प्रॉब्लम क्या है वहाँ पे?
डिफिकल्ट काम को करने में तीनों जन लगे हुए हैं.
सो वहाँ पे क्या था, रेगुलेटर ने बोल दिया एक ही एक्सचेंज होगी. द स्टेट अवे फ्रॉम द हॉर्सेस माउथ की एक एक्सचेंज होगी. सर यहाँ पे सेबी ने बोल दिया आइदर यू कैन लॉन्च एज अ सेगमेंट, आइदर यू कैन लॉन्च एज अ डिफरेंट एक्सचेंज. सो वी टेकन अ स्टैंड टू लॉन्च एज अ डिफरेंट सेगमेंट. दैट्स इट.
चलिए, यस सर.
I have more a comment to make. I see that, there is a lot of pressure to deliver overnight, correct? But I just come from a little bit of manufacturing and retailing perspective, and I think that's interesting. In a diamond jewelry design concept, it takes 3 months for the concept to get transferred into a product that will be delivered to a retailer. How much? 3 months. Typical stock rotation of a retailer of a diamond jewelry is 1 year.
It's 1 year, you said?
1 year it takes. Technically, I mean, when I talk to my clients, I say, January 1st, this brilliant idea came in my mind and said, let's get this product designed. The designer takes 1 month to sketch it out. The proto takes 1 month. The production takes 1 month. So 1st of April, it hits the retailer showroom. This is 2022. Theoretically, the product reaches the customer's hands, or she comes and finally selects the product on 31st of March next year. So it takes 15 months from concept
to the final transaction.
Consumer's hands. And here we are all, I understand there is pressure when I make the payment, I want delivery yesterday. Like Amazon is supposed to be saying that before you think of what you want, I will produce it and deliver it to you. But I'm just giving you a sense of, how much time we are all spending trying to minimize delivery time and 0.65% and 0.35%. And at the retail end, right, we are talking about 4%, 5% margins. Right? And somewhere, I don't know how many of you heard that point in the morning, right? The margin is really sitting at the retail end. At the consumer end of the spectrum, right? Nobody asked that lehenga, that fancy designer, why you charging me 10 lakhs for a cotton lehenga? But for a 30,000 rupee product, we argue and have to convince the customer. It's just a point, I mean, nothing taking away anything, but just I wanted to say it takes 15 months for the product to hit the consumer.
Thank you.
Can you take mic?
Can you take mic,
Take a mic,
please?
please. You have to keep pressing it unless you see a green light on that.
So I'm an academic, I'm actually an assistant professor of marketing. Just to add to this consumer point, so the retailer, when the customer comes and buys the diamond, the customer gets it instantaneously. So that is where this demand for speed comes. So
Holding it for 1 year?
yes, but the customer does not realize it, right? So
Generally saying that for the kind of effort that we are putting together to cut every 0.1% margin, effort of transferring from capital all across.
yes, but that is also, part of that is also about matching the communication, about communicating.
Excuse me, I think we are deviating from the topic. Let's discuss only the exchange, please. If anyone has any other question, or will, Harish?
There was one question regarding the, domestic material, domestic gold and the exchange, International Bullion Exchange material together in the same location. This was, so I think in the bonded warehouse, when we nominated banks used to import duty-free gold, there used to be the same location. Of course, there was a segregated area, totally bonded area, where the duty-free gold was kept, and in other areas separately, the duty-paid gold was kept. So similarly, here also maybe you can pursue with the custom authorities if it can be done.
So I think it's for the sequel and brings to try this out, I think.
Remember, I think Chaman, you remember that?
Yeah, I remember. Let me add one thing. The bond was given by whom? Bond was given by the buyer or proposed buyer. Here, this is no man's property, more or less. Who will give the bond and who will bear that cost? Bond amount will be massive. And I don't think the logistics company should take that kind of a risk of bond.
So do we have any more questions from the audience? Or we concluded?
Yes, concluded.
Any closing remarks from anyone? Thank you very much for the patience, and I think we had a very long session, 2.5 hours almost. Thank you very much.
Thank you.